Greetings, accounting students. Before we get into a practical example of how to determine a GST balance, some students have difficulty with some basic GST calculations. So I'll just start with this. So when we get an item where we've got the bracketed information that says including GST, we need to use a little bit of maths to work out the GST component. So advertising, $440. So what we do is we divide this into 11 parts because the GST and the advertising have a 1 to 10 ratio. So if we divide 440 by 11, that gives us $40. And so therefore one part is GST, $40, and then 10 parts, 10 times 40 is for the advertising. So now I'm going to go through a couple of practical examples where we're going to calculate the final GST balance. In the Unit 1-2 course, there are 5 potential sources of information that basically will contribute to our calculation of GST. The first one is our opening balance. Now, this will either be found in a balance sheet or possibly in sentence form in the stem of the question. So in this particular example, if we look at our current liabilities, we've got a GST payable balance of $1,100. This will be recorded as a positive figure because this represents the amount of GST that is owing to the ATO based on what occurred in the previous reporting period. So then we get into our special journals. And so here we've got some totals. And if you are only dealing with cash transaction, then you won't have to worry about the sales journal because that's for credit sales. But in this practical example, we're going to look at both cash and credit. So this is GST either received or charged on our revenue transaction. So if we go into our CRJ, we have collected from our cash customers $2,550. So we are collecting this on behalf of the ATO. So that will increase our GST payable balance. Ditto with the sales journal. This time we're not collecting the GST, we're charging it for credit sales. So this GST that has been charged to our accounts receivable will be collected in the future. And so this will also increase our GST balance. So then we look at our other 2 special journals. We've got some GST paid for various expenses, assets, etc. And this GST represents an offset of that GST that we collected and charged on the credit sales, because the ATO is only going to collect the GST on the actual sales. So this will reduce our GST balance. Same deal with our credit purchases journal, 1,030. These are going to be negative figures in our calculation because they're going to offset the GST that we collect or charge on our revenue items. Okay, so I've taken screenshots from those previous 3 slides. So basically, and condensed it all onto this slide. So now we're in a position to calculate our final GST balance. So step 1, your opening balance, we get that from the balance sheet, 1,100. Step 2, add the GST that we collect from our CRJ. So these are all positive figures. And then we've got 1860 in our sales journal. So just to make the maths a bit easy, let's generate a subtotal. And if I add these 3 up, we get 5, 5, 10. So that's just a subtotal. Then we get into our payments, GST payments, and we're going to minus that figure. That offsets the GST that we've collected or charged. And again, same for the purchases, credit purchases. So if we subtract those 2, we end up with a final balance of 3,110. I hope my maths is right there. Now that's a positive figure. So that will be reported as a current liability in our balance sheet, just as it was up here with an updated figure now. And that's because it represents an obligation to the ATO to basically provide an economic resource in the form of cash that will be paid when we do our BAS, business activity statement. All right, just to up the ante a bit, let's work with some negative figures. So similar scenario, but this time we've got an opening balance in our current assets. The ATO actually owes this business $800 because they have paid or been charged more GST on their purchases of inventory, expenses, assets, etc. Those GST amounts have exceeded the GST that has been collected or charged on revenue items. So this is actually going to be a negative figure in our table that we do a bit later. So same drill as last time. We've got a couple of positive figures. We've collected this GST on behalf of the ATO, so therefore that's going to increase our GST liability. And here we've got a big GST payment amount in our payments journal because we've bought a van and been charged some GST on that. And then we've still got our $1,030 for our GST charged on our purchases of inventory. So this is where we need to be a little bit careful with our positives and negatives. But basically what we have here is the template that you are always going to use in the Unit 1-2 course to calculate your GST final balance. Now, some of these you might not have any credit sales or credit purchases, so you can simply just use a 0 for that or just leave the line out. So our opening balance, as I described earlier, it's negative. The ATO owes us, not us owing the ATO. So you're going to record that as a negative figure. Then we go to our CRJ, and we've got a positive figure, so we need to be a bit careful with our positive and negative. We've got 1860, also a positive figure because we've charged that on behalf of the ATO. So again, just to make the maths a bit easier, let's work out our a subtotal. So we've got minus 800. If we add these two together and subtract the 800, we should get 3610. Positive figure. Okay, then we subtract our GST paid. So that's going to be a minus 6370. You're going to minus the GST charged by our suppliers, 1030. And if we subtract those two, the negatives are bigger than the positives, you're going to end up with negative 3790. Now, because that is a negative figure, as was the case up here, this is going to be classified as a current asset. It's a positive figure in our balance sheet. The negative up here just indicates that in terms of the ATO, we don't owe the ATO money, they owe us. So therefore, that satisfies the criteria for a current asset because it represents an economic resource that will basically flow into the business within 12 months when the ATO settles up and gives us a GST refund.